Hello, this is topic number 8 and we will be discussing offshore banking, their classification, common characteristics, major objectives, and then the roles. Alright, so let's start. Okay, so let's begin with the law in the Philippines regulating the operations of offshore banks. So we have here Presidential Decree number 1034 in 1976, authorizing the establishment of an offshore banking system in the Philippines. Okay, so let's read the statements here. Whereas conditions conducive to the establishment of an offshore banking system, such as political stability, a growing economy, and adequate communication facilities, among others, exist in the Philippines. Forgot to mention. So basically, the reason why we allow foreign banks to have branches here in the Philippines is because of international trade. As the Philippines start to engage with international trade, transactions with businesses from other countries, so we also needed to, in a way, have these banks, mutual recognition, and to allow nationals from these countries, or basically just foreigners, to be able to conduct their banking transactions while being here in the Philippines. Although, of course, currently, with the advent of internet technology, we are able to do these transactions online as well. Alright. Whereas it is in the interest of developing countries to have as wide access as possible to the sources of capital funds for economic development. Whereas an offshore banking system based in the Philippines will be advantageous and beneficial to the country by increasing our links with foreign lenders, facilitating the flow of desired investments into the Philippines, creating employment opportunities and expertise in international finance, and contributing to the national development effort. Whereas the geographical location, physical and human resources, and other positive factors provide the Philippines with the clear potential to develop as another financial center in Asia. Now, therefore, the President of the Philippines, this was issued by President Marcos. Definition of terms: offshore banking shall refer to the conduct of banking transactions in foreign currencies involving the receipt of funds from external sources and utilization of such funds as provided in this decree. Although, again, this was in 1976, so there have been amendments. And from what I know currently, later we'll go over the current services that they can offer as authorized by the BSP. Offshore banking unit shall mean a branch, subsidiary, or affiliate of a foreign banking corporation which is duly authorized by the BSP to transact offshore banking business in the Philippines. Deposits shall mean funds in foreign currencies which are expected and held by an offshore banking unit in the regular course of business, with the obligation to return an equivalent amount to the owner thereof, the depositor, with or without interest, depending on the type of account. Resident shall mean an individual citizen of the Philippines residing therein. An individual who is not a citizen of the Philippines but is permanently residing therein. A corporation or other juridical person organized under the law of the Philippines. Corporations and partnerships as well. A non-resident shall mean individual, corporation, or other juridical person not included in the above definition of resident. What do you call this? There's a term for this type of definition. Branch shall mean a separately managed department or unit of a foreign corporation. Qualification requirements subject to regulatory guidelines as the Monetary Board may prescribe. Only banks which are organized under any law other than those of the Republic of the Philippines, their branches, subsidiaries, or affiliates shall be qualified to operate offshore banking units in the Philippines. However, local branches of foreign banks already authorized to accept foreign currency deposits under the provisions of RA number 6426 may opt to apply for authority to operate an offshore banking unit under the provisions of this decree. Okay, might have to check that. Certificate of authority to operate to be applied with the Monetary Board or the Central Bank. Okay, and then they have fee. Back then it's $20,000 US. Okay, I'm sure it's been amended nowadays. Corporate undertaking, supervision, transactions of offshore banking units. We'll be discussing this later. Tax and other incentives. Majority of offshore banks are, tax exempt. So that's one of the privileges, and that's why there are people who put their money in offshore banks, because they can do away with the payment of taxes, which would eat up a portion of their savings or deposits or the earnings of it. All right. Okay, you can also read this in your own time. I've provided the link in the script, which will be linked in the description down below. Offshore banking units shall be exempt from all forms of local licenses, fees, dues, imports, or any other local taxes or burdens. Not sure if this have been retained or if there have been amendments changing this already. Effect of certain laws, sanctions for violations, repealing clause, and then effectively. Alright, let's go back with the script. Okay, so let's discuss the common characteristics, major objectives, and roles of offshore banking, or in other countries it's called offshore investing. So here's an article from investopedia.com discussing the pros and cons of offshore transactions. So offshore investing is often demonized in the media, which paints a picture of tax-evading investors illegally stashing their money with some shady company located on an obscure Caribbean island. While it's true that there will always be instances of shady deals, the vast majority of offshore investing is perfectly legal. Basically, they operate within the law, within the regulation, so it's just that they could be taken advantage of by some people, individuals, or organizations in which they get the best out of it, engaging in offshore transactions. Offshore investing, despite its sketchy reputation, is a legal, effective way to invest in entities that are only available outside your home country. So overview, it refers to a wide range of investment strategies that capitalize on advantages offered outside of an investor's home country. There is no shortage of investment opportunities offered by reputable offshore companies that are fiscally sound, time-tested, and most importantly, legal. Okay, why is it called offshore investing? So basically, people who engage in offshore banking, they do, in a way, invest because they put their money into it so that they could avail of the tax incentives and to earn money on their savings. Okay, so it's more than savings in a way. It's more than just banking, and it's more appropriate to call it an investment. All right. So depending on your situation, offshore investing may offer you many advantages, including tax benefits, asset protection, and privacy. Okay, because of the secrecy, bank secrecy law. So for individuals who have a lot of wealth and they don't want to tell people about it or have it publicized or something, so they can take advantage of the privacy related to banking. Disadvantages include increasing regulatory scrutiny on a global scale and high costs associated with offshore accounts. So there have been scandals related to offshore banking. There were several instances in the past. So in a way, currently, as from then on up to this point in time, there have been more regulations being imposed on offshore banking, and so in a way the eyes of the people are focused in a way on them because of the problems that are presenting themselves over the years, over the decades. Okay. And then of course, high cost because of the advantages. It's only what do you call this? Some sort of an offset that the cost associated with having offshore accounts is also higher. Pros of offshore investing. So there are several reasons why people invest offshore. Again, first one is the tax advantages. Many countries known as tax havens offer tax incentives to foreign investors. In a way, even here in the Philippines, we want to encourage foreign investors to put their money into the businesses located in our country. So it's not just the Philippines, other countries are like that as well. So it's possible that we have Filipino wealthy individuals who'd rather put their investments in foreign countries as well. It's possible that they already have local investments, but as the principle of diversity tells us, so they are probably diversifying their investments. So they have local investments and they aim to have foreign investments as well. All right. On the part of the Philippine economy, so inviting, encouraging foreign investors to put their money into our country to help out the local economy would be a goal, okay, as part of the economic development, economic growth. All right. For a tiny country with very few resources and a small population, attracting investors can dramatically increase economic activity. Alright, key takeaways. Offshore investing is beyond the means of many, but the wealthiest of investors. The wealthy, the rich. Advantages include tax benefits, asset protection, privacy, and a broader range of investments. Downsides include high costs and increased regulatory scrutiny that offshore jurisdictions and accounts face. Simply put, offshore investment occurs when offshore investors form a corporation in a foreign country. The corporation acts as a shell for the investors' accounts, shielding them from the higher tax burden that would be incurred in their home country. Okay? Because the corporation does not engage in local operations, little or no tax is imposed on it. Many foreign companies also enjoy tax-exempt status when they invest in U.S. markets. As such, making investments through foreign corporations can hold a distinct advantage over making investments as an individual. So that's why in an earlier video, as I explained offshore banks as banks which take investments from the people in the country, and then they take those investments, they put it in the home country of the foreign bank or the foreign unit. Okay, so basically the investments is taken away from that particular country. Okay, it's taken offshore. Okay, and then of course most of the time these countries are small in scale, they have limited population, that's why they are encouraging foreigners to invest, and in exchange for the infusion of that investment or resources, so they are providing them with tax exemptions, incentives, benefits, and sometimes the return is also given in a way that most of it will be given to the investors, and then half would be retained by the the offshore bank or something. All right. So they are they are subject to little or no tax because they technically don't engage in transactions within the country, okay, within the Philippines. They take the money elsewhere and then use it for investments in other places. Okay. So basically, in taxation, it's imposed on money earned within the Philippines. So if it's taken outside, so basically, it's no longer in the jurisdiction of the Philippines. Although there are, of course, technicalities there. Asset protection, another advantage. Offshore centers are popular locations for restructuring ownership of assets. Through trust, foundations, or an existing corporation, individual wealth ownership can be transferred. Many individuals who are concerned about lawsuits, foreclosing lenders, or creditors collecting on outstanding debts elect to transfer a portion of their assets from their personal estates to an entity that holds it outside of their home country. Evasion of liabilities. Okay. Some people can take advantage of the offshore banks for that purpose. That's why offshore banks sometimes really have that connotation that they are being used by the wealthy for their own benefits. By making these on-paper ownership transfers, individuals are no longer susceptible to seizure or other domestic troubles.
If the trustor is a U.S. resident, their trustor status allows them to make contributions to their offshore trust free of income tax. However, the trustor of an offshore asset protection fund will still be taxed on the trust income, the revenue made from investments under the trust entity, even if that income has not been distributed. On the income only, but not on the principal of the investment. Confidentiality, privacy. Many offshore jurisdictions offer the complementary benefit of secrecy legislation. These countries have enacted laws establishing strict corporate and banking confidentiality. If this confidentiality is breached, there are serious consequences for the offending party. An example of a breach of banking confidentiality is divulging customer identities, disclosing shareholders, is a breach of corporate confidentiality in some jurisdictions. Okay? However, this secrecy doesn't mean that offshore investors are criminals with something to hide. It's also important to note that offshore laws will allow identity disclosure in clear instances of drug trafficking, money laundering, or other illegal activities. So these are the exemptions to the bank secrecy law. Okay, if there are clear evidences pointing that these people who are owners of these bank accounts in offshore banks are committing fraud or committing a crime, then with a court's order, it's possible that their information could be provided by the offshore banks to the prosecutors. From the point of view of a high-profile investor, however, keeping the information such as the investor's identity secret while accumulating shares of a public company can offer that investor a significant financial and legal advantage. High-profile investors don't like the public at large knowing what stocks they're investing in. Multi-millionaire investors don't want a bunch of little fish buying the same stocks that they have targeted for large volume share purchases. The small fry runs up the prices. Okay, so these are certain rules in stock investing, stock trading, and in other investment markets as well. Because nations are not required to accept the laws of a foreign government, offshore jurisdictions are in most cases immune to the laws that may apply where the investor resides. U.S. courts can assert jurisdiction over any assets that are located within the U.S. borders. Therefore, it is prudent to be sure that the assets an investor is attempting to protect not be held physically in the United States. On the other hand, assets kept in a foreign bank accounts are still regulated under United States law. Okay, it's pretty much the same here in the Philippines. Okay, if it's in the Philippines, it will be taxed. If it's used in the Philippines, it will be taxed. So it's normally taken out of the country and used elsewhere. Diversification of investments. In some countries, regulations restrict the international investment opportunities of citizens. Many investors feel that such restriction hinders the establishment of a truly diversified investment portfolio. Offshore accounts are much more flexible, giving investors unlimited access to international markets and to all major exchanges. On top of that, there are many opportunities in developing nations, especially in those that are beginning to privatize sectors formerly under government control. China's willingness to privatize some industries in particular has investors drooling over the world's largest consumer market. They are after that. Offshore jurisdictions such as the Bahamas, Bermuda, the Cayman Islands, and the Isle of Man are popular locations that are known to offer fairly secure investment opportunities. Okay, so after the pros, we have the cons. While domiciling investments and assets in an offshore jurisdiction has benefits, there are also drawbacks to consider. First is the increasing regulatory scrutiny. So, back in the day, they are not highly regulated. They don't have much regulations, but again, given the scandals from the past, so many many governments are trying to put them under a certain type of regulation. Okay, in recent years, the U.S. government has become increasingly aware of the tax revenue lost to offshore investing and has created more defined and restrictive laws that close tax loopholes. Investment revenue earned offshore is now a focus of both regulators and tax laws. Okay. But then again,
downside of this as well, for that particular country that's trying to restrict offshore banking, is that, foreign investors might not be keen to use them, or the foreign investors might think that they are not in a way encouraging foreign investors, and that they are focusing on them too much. Okay, restrictive is the term. The U.S. Foreign Tax Account Compliance Act is an example. FATCA requires U.S. citizens at home and overseas to file annual reports on any foreign account holdings. According to the U.S. Internal Revenue Service, IRS, U.S. citizens and residents are taxed on their worldwide income. It's the same for the Philippines. If you're a Philippine citizen, regardless of whether you're in the Philippines or outside the Philippines, if you're a citizen, so you're taxed on your income here in the Philippines and outside the Philippines. As a result, investors who use offshore entities to evade U.S. federal income tax on capital gains can be prosecuted for tax evasion. Therefore, although the lower corporate expenses of offshore companies can translate into better gains for investors, the IRS maintains that U.S. taxpayers are not to be allowed to evade taxes by shifting their individual tax liability to some foreign entity. The Organization for Economic Cooperation and Development, OECD, and the World Trade Organization also have rules that require banks to report information about their foreign customers. But each country complies with these laws in different ways and to different degrees. Okay? There are still tax loopholes, but most are shrinking more and more every year because of the scrutiny. Alright, cost. Offshore accounts are not cheap to set up, so again, mostly it's for the rich and wealthy. Depending on the individual's investment goals and the jurisdiction they choose, an offshore corporation may need to be started, and that may mean steep legal fees and corporate or account registration fees. In some cases, investors are required to own property or residence in the country in which they have an offshore account or operate a holding company. Furthermore, many offshore accounts require minimum investments of between $100,000 and $1 million, so that's the range of investment requirement. Businesses that make money facilitating offshore investment know that their offerings are in high demand by the very wealthy, and they charge accordingly. Since you guys are wealthy, so we'll be charging higher fees as well. Okay, so that's the main point there. Special considerations: more than half the world's assets and investments are held in offshore jurisdictions. Many well-organized companies have investment opportunities in offshore locales. Still, like every investment move you make, use common sense and choose a reputable investment firm. It is a good idea to consult with an experienced and reputable investment advisor, accountant, and lawyer who specialize in international investment. Okay. Currently, there are a lot of scams that are going on, so you have to make sure that you are dealing with an organization, an offshore bank that is registered with the Monetary Board, the BSP, so that it's operating legit or legally in the Philippines, and that in a rare circumstance wherein your money gets taken, stolen, so you'd have a recourse to report to the BSP and in a way get help in running after the criminal or something. Okay, so you have to ensure that since these are in a way a very not really an advanced topic, but it's a complicated matter, and that we're not very familiar with this yet. So when someone offers you to invest in such and such, you have to be very thorough in your research before giving your money away. Alright? You have to do your research, okay, and be very vigilant. Okay, and don't be hasty, seriously. Okay, if you are looking to offshore investments to help protect your assets or are concerned with estate planning, it would be prudent to find an attorney or a team of attorneys specializing in asset protection, wills, or business succession. Yes, don't do it yourself, alright? If this is going to involve a large sum of money, do it through a lawyer.
You need to look at the investments themselves and their legal and tax implications. Of course, these professionals come at a cost. In most cases, the benefits of offshore investing are outweighed by the tremendous cost of professional fees, commissions, and travel expenses. Okay, and then we have another article here from KPMG. Home.kpmg. This is an accounting firm, consultancy, providing consultancy services. This is an article from October 2018 about the tax reform and then how it affects the FCDU and the OBU or offshore banking units. Okay. I think I didn't include the introduction, but here we go. An FCDU, which stands for Foreign Currency Depository Unit, refers to a unit of a local bank or of a local branch of a foreign bank authorized by the BSP to engage in foreign currency denominated transactions pursuant to Republic Act 6426. An offshore banking unit refers to a branch, subsidiary, or affiliate of a foreign banking corporation which is duly authorized by the BSP to transact offshore banking business in the Philippines in accordance with the provisions of PD number 1034 as amended. So again, there are amendments already. The taxation of FCDUs and OBUs has been the subject of several tax reforms in the past, originally in view of the country's desire to increase its links with foreign lenders and facilitate the flow of desired investments in the Philippines. A sweeping tax exemption was granted to OBUs and FCDUs. So yun nga, that's one of the incentive, to encourage them to come here, operate. The sweeping privilege was, however, lifted in 1998 when RA number 8424 took effect. Under that law, income earned by FCDUs and OBUs from foreign currency loans and/or transactions with non-residents and other FCDUs or OBUs is subject to 10% final tax based on the amount of the income, right? In 2004, the government restored the tax exemption, so binalik ang tax exemption, when it enacted RA number 9294, under which income derived by FCDUs and OBUs from foreign currency transactions with non-residents and other FCDUs and OBUs shall be exempt from all taxes. So at first glance, it may be apparent that removing the tax exemption means more revenue for the government in the form of taxes. Okay, that's the first assumption. Okay, when we tax these entities, we'll get more income. But they realize by taxing them, they'd be, no thanks, we'd rather not operate in this country, right? We'd rather go somewhere else. So in that case, they would not be taxed and they would be going away as well. So the tax exemption was restored, okay, so that they would stay, they would operate here, the money would remain in the country, right? Revenues which can be used for social welfare and improving the country's infrastructure, among others. However, one must keep in mind that FCDUs and OBUs are important institutions in the development of the country's economy. As one news article that quoted the representatives from BSP and the banking sector puts it, the operations of FCDUs and OBUs in the Philippines help attract foreign investments, mobilize foreign savings, stabilize sourcing of foreign currency, provide secondary source of dollar liquidity, and improve capital markets in our country. Okay? Removing the tax exemption can have a negative impact on the operations of FCDUs and OBUs and consequently adversely affect the country's economy. So damay-damay na yan, it's, chain reaction. Hopefully, our legislators will be able to find a middle ground. Admittedly, increasing the country's revenue is a priority, but what the country should sacrifice and how much should the country sacrifice should also be considered. Aesop's fables could not have said it better, do not kill the goose that lays the golden egg. Okay, so that's what happened before. Taxing them, they'd rather not stay here, they'll go elsewhere. So that's like killing the goose. Okay, but if you don't tax them, of course, that would mean a lower revenue for the government, but at least the goose would stay to lay egg and contribute to the economy of the country. Okay.
So it's kind of hard to find a middle ground actually. But then again, this is in 2008. It's already 2021, so we'll see what they've ended up doing. Okay, so here are extra information. 10 foreign banks representative office actively operating in the Philippines. Article from doingbusinessinthephilippines.com. Okay, so we have Bank of Singapore Limited, Barclays Banks, DBS Bank, Japan Bank for International Cooperation. How do you pronounce this? Rothschild. The Bank of New York, Mellon. The Export-Import Bank of Korea, Union Bank of Switzerland, Wells Fargo Bank, Korea Development Bank, Representative Office. Okay, so all of these are representative office or foreign banks representative offices. Alright, so that's it for this video. This is offshore banking. So that's it. Thanks and bye.